Good morning. I'm with Chad Peters, CEO of Ridgeline Minerals. The symbol is RDG on the TSX Venture. Chad, how are you?
I'm good, buddy. How are you?
I'm great. I saw the exploration target for Chinchilla Oxide. I think that was great to make investors aware of that. And I think we can all kind of do our own math and, look, it's a range. It's a range of potential outcomes. But 50 plus million ounces of silver near surface in an open pitable setting is pretty good. It's a good start, at least.
I think so.
Yeah, and when we're talking about more than an ounce per ton silver with gold credits, in this environment, I mean, the economics just completely change at $80 silver and $5,000 gold. I mean, like suddenly this rock is over $100 per ton. I know we need to do metallurgy and everything on it, but that's pretty profitable when it's at surface.
Yeah, that's what, we'd known that we had something pretty significant for a long time at the Chinchilla Oxide Zone, but at $20, $25 silver back in 2023, it didn't really move the needle, right? And so we wanted to go make a big discovery, which we did do last year with South 32 at Chinchilla Sulfide. But with these prices where they're at, we were like, geez, you know what? We need to make sure that investors understand the potential opportunity here. Now, it's not quite at a resource stage yet. We need to drill about 5,000 more meters, which is not much, right? It's a 4 or 5 month drill program gets this thing to an inferred maiden resource. So we have a pretty high degree of confidence with it. But yeah, like at the kind of middle range, what was really frustrating is, unfortunately, as an exploration target, I wasn't able to report on our contained metal ranges. But if you take the average tons, the average grade of those metals, we were talking about roughly 70 million ounces of silver at around 50 grams per ton, give or take 45, 50 grams per ton, and around 200,000 ounces at 0.13, 0.14. We've done baseline metallurgy in 2020 on RC chips out here at the Chinchilla Oxide Zone, and we received an average of about 80% gold recovery via just conventional cyanide leach. At least that's what the solubility rates were coming back on the bottle rolls. And then we had anywhere from 40 to 60% recoveries on that same RC chips. But the really important thing to point out is we did those bottle rolls using RC chips from 2019 and 2020 drilling. When we started drilling core at the project, our base metal grades went up anywhere from 75 to 100% across the board. Because what was happening is this is a breccia ore body, right? And so when we were drilling this with RC, it was breaking it apart and it was washing all the fine material out of that zone and out of those chips. And so it was washing away the silver and the lead and the zinc. For some reason, the gold seems to be captured in it might be two different events, who knows, right? But the gold grades held steady, but our silver grades went up dramatically. So when we went to our metallurgist and said, hey, by the way, drilling, if we just twin the same hole, we expect 100% increase roughly in silver grade. They said, well, you really should redo the bottle rolls at some point on these, because you're probably going to see your cyanide solubility of your silver go up into the 60% range, which would be really exciting, right? So you're talking about, for example, the Core Rochester mine is the only operating primary silver pit mine in Nevada, and I believe it's probably the largest in the United States. I believe last time I checked, their average grade is 27 grams per ton silver. We're coming out with an exploration target that's essentially 2x that grade, plus a gold kicker. So yeah, I think it's really exciting. It maybe didn't quite catch the attention of the markets because I wasn't able to put contained metals, and folks don't like doing math. I understand. I don't like doing it either. But it is pretty substantial. And, us and our partners at South 32 know we're onto something big.
Yeah. I think some people are confused between the Chinchilla Sulfide and the Chinchilla Oxide, which is hard to believe, but I think that's the reality here.
Yes. So, I mean, if you look to this right here, there's that black box that you see on the screen there, that little dashed black line, that's Chinchilla Oxide. It's just a very small piece of a much bigger prize at Chinchilla, right? And Chinchilla Sulfide just hit in our program last year. high grade zinc with silver, gold, copper, and antimony credits. And that's 2.5 kilometers roughly away from that Chinchilla Oxide Zone and down dip. And you can see that we are, we have hit holes in the past that have hit sniffs of that CRD mineralization in the same host rocks the whole way along. So lots of upside potential. And to be fair, that exploration target, I think we can upgrade dramatically on that, right? Some of our best hits that we've drilled, in 2020, 2021 through 2023, substantially higher silver grades than what we're having our exploration target. So yeah, I think it's got a lot of potential.
Yeah, so let's go back to Chinchilla Sulfide and tell us where we're at there. Obviously, we had the discovery hole back in Q4 2025. Yeah. What's happened since then, and where are we at now with Sulfide?
Yeah, you bet. So I'm going to go back to this plan view quick just to kind of reorient ourselves. We were at AA prime, which was looking essentially along the strike of the known mineralization. Now we're going to go to BB prime, which is looking down that MT anomaly and back towards Chinchilla Oxide. So it's a bit of a different orientation. But what you really want to hit home here, I'll zoom in a little bit for you. Let's see if I can center it a bit better. There we go. So, you look to the left, you have hole 53. That hit our big multiple stacked horizons of mineralization, combined thicknesses of about 27 meters of well over 7% zinc with, half an ounce silver, lead, gold, antimony, copper credits, etc. We think we just hit onto the edge of something with hole 53. What we want to do now, we have assays pending on hole 54. They should be out any day or in the next shortly here anyways, at the very least. We're expecting the assays any day. And you can see that these contours, these MT contours, the bright colored purple, reds, and yellows, you're seeing that we're hitting mineralization kind of along the margin between the purple and the red anomaly seems to be kind of where our mineralization seems to be tracking. Hole 54 was drilled right in the middle between the two. These are wide spaced holes. We're talking about, 700 to 800 meters between each drill hole, right? So big step outs across the entire strike of the anomaly. And we're hitting smoke or high grade in every single one. Lots of structural complexity. You can see that there's a lot of, faults offsetting and juggling things around. So certainly there's going to be lots more drilling required, I think, to make sure we're hitting preserved chunks of host rock. That's what's really critical, I think, is to make sure we got an unfaulted piece of host rock adjacent to these structures, which are your feeders, right? So I'm really excited of how it's shaping up. We've got a multi-kilometer anomaly clearly with high-grade sulfide. The MT anomaly appears to be tracking that sulfide, and we can use that to deliver better drill results and more efficient drilling, I think, in 2026. We're also doing borehole EM. So this spring, South 32 has authorized us to do, essentially it's a downhole geophysical survey, which tracks the massive sulfide mineralization, right? It can look, the tool goes down the drill hole and it can actually see outside of the drill hole, if you want to call it that, just for simplistic terms, but it can identify sulfides outside of the drill hole to use for targeting. So in the event of, hole 53, we have a direct correlation to sulfide, which that MT or that borehole EM will pick up. And then it'll extrapolate that out about 200 meters in diameter around that drill hole. So we'll be able to see, maybe 100 meters off to the right of that hole, right? It blows out into a much thicker zone, right? And we obviously put a drill hole into that in 26, or in hole 54, didn't actually drill as deep as we would have liked. We left the drill hole open, and it's ready to re-enter in the spring, but we'd like to get that down hole 54 to similar depths that we drilled in hole 53 and hole 52A. So there's more to come from hole 54, but we're going to use that borehole EM as a targeting technique for hopefully improving our efficiency, because when you're drilling these kind of depths, 1,000+ meter holes, it's not cheap, right? It takes a long time, it's expensive. You want to put your best foot forward on every single drill hole, and that borehole EM will help.
Okay, so this is based upon the drilling to date. This has gotten a little bit more complex. It's more structurally complex than you realized at first. There's more faulting. And it's not the novice, geo is going to say, okay, the porphyry's over there, the heat source is over there to the west, right? And so we want to drill closer to that. That's where the fluids are more likely to pool and get trapped. But it's not that simple. And actually, there's a lot more going on here in terms of forming traps for the sulfides. Can you speak to that a little more?
Yeah, absolutely. So like just looking at this bigger picture, you're right. The Beat Valley porphyry on the left, that was your interpreted source. And so the very simple model is, hey, let's just drill closer and closer to that porphyry and it'll get better and better. But it's actually, there's pressure, temperature, the chemistry of the rocks, which can dramatically change how this system behaves, right? And so what we're trying to figure out, I just was showing this image for a bit greater context. You go back to this guy, right? There's a ton of structural offset going on. Like, so in hole 54, we've been able to measure, like, just based on where we hit that brown unit on the left side of the drill hole trace versus that big thrusted up unit on the right-hand side where the text is. That's showing like 300 meters of, or 200 meters, sorry, of offset along that fault zone, right? Something is being, we're seeing incredible amounts of movement along these structures. And so that's a good thing. The more structurally complex an ore deposit typically is, in my opinion, the better off you are. But it does lead to, you got to drill the thing, right? You got to figure out where your blocks are being faulted off, where they're sitting preserved. And so hopefully with the borehole EM and drilling more holes this year, we're going to start getting a better feel for where those preserved blocks are. And that's where you're going to see this system. We're really going to start be able to build tons really fast, because we'll be able to say, okay, these rocks haven't been faulted off. Let's just pepper it with holes. This is, for example, this block, where it says assays pending in hole 54. That block is 400 or 500 meters wide, right? So that's a big chunk that you can start drilling and testing to try to identify where the zone is. And the same thing goes for the block to the left of that, right, where hole 53 is. I would want to start drilling back towards hole 54, back towards that, clearly that feeder fault. There's a big structure there. I want to be drilling back towards that and bridging that gap between 53 and 54. And I think you start getting some significant intercepts coming that direction as well. So.
Okay. So hole 54, the final chapter is not, written yet. That will be extended to depth. Yep. And then there's more work to be done in terms of testing in between holes 53 and 54.
Definitely. And between 54 and 52. I mean, if you actually look, both 54 and 52, we ended up drilling both sides of that horse block, if you want to call it, that big thrusted up block. So we ended up in 52A, we hit significant thicknesses of low-grade barbecue rock showing big system. In 54, we hit an interesting looking upper zone that I'm intrigued to get out to the market. And then the lower zone is still a question mark, right? Because we didn't fully test that MT anomaly and down through the host section. So yeah, I'd say more to come from 54. And what we're seeing is every single hole we've drilled this year is drilling considerable system, with hole 53 hitting into what hopefully is just the fringes of something much bigger. And 52A and 54 have both been, question marks so far, but clearly showing the continuation of the system. I mean, for a maiden drill program to have, I think a discovery hole like 53 was substantial. And then it's given us a good base for a drill program in 26.
Okay, so then what is the plan for 2026 with Cell 32? You
bet. So I'm going to go back to plan view here just to give a little better context. Although we've put out this exploration target at Chinchilla Oxide, we're not going to advance anything at Chinchilla Oxide right now. Reason being is, South 32 are partners. They're well aware of what we have at Chinchilla Oxide. They've known for 2 years now. They did the model, they did their own modeling and internal work on that oxide zone. So that is something that if the discovery at the sulfide zone continues to grow, then obviously you start bringing in the oxide zone and figuring out a way to mine that in a development scenario. But right now we're going to focus fully on the sulfide horizon. We're going to try to get more holes, particularly between hole 53 and 54. We're probably going to drill kind of a triangle of holes between the three. And the idea is getting into this preserved block with some vertical drill holes that aren't cutting across some of these structures that are showing considerable offset. Get into these preserved blocks, get full intersections of the sulfide horizons, and then we can use those holes as parent holes to drill wedges off of, because at those depths, it's more cost effective to drill a motor run to actually, you can essentially, using a higher cost drilling technique, you can actually control the angle of the drill hole, right? So you can branch off of that existing hole. Talon Metals and some of those groups are doing similar things with their deep drilling. And you can branch off of those and you can actually target specific spots that you want to hit. And it allows you to just be more cost effective. And every time you drill a parent hole, if you want to call it that, you're spending like $500,000 just to get down to sitting right above your target. Well, if we can spend that initial 500 and then do 5 motor runs off of it and branch off like a Christmas tree, it's a far more effective way of drilling it. So that would be our focus for the year is get in that 3 to 5 drill hole range. And we really like the concept of also putting a hole over right at the edge of our property boundary, kind of where that red and orange contour kind of drops down and drags towards the porphyry. We're going to put a hole probably down in there. And that's testing. If you think of like the Hermosa Taylor deposit and their peak discovery, for folks that aren't aware, pretty much, at Hermosa Taylor, as they've continued, very similar geometry and style of system is what we see at Selena. It's also owned by South 32. And as they've drilled deeper and down towards the porphyry source, which is a Sunnyside porphyry, they've hit the peak deposit, which is a copper-rich skarn system. We're hoping that potentially, our RMT and our old magnetics model shows a similar trend, that we think that there's a good opportunity to have a high-grade copper-rich skarn zone as we get towards the edge of that porphyry system. So that would be something we'd want to test too. I mean, that's the thing, is this is such a big project, such a big target, that we're still a ways away from starting to do 50-meter infill drilling holes, right? We're still trying to find the core of this system and then start testing the edges and grow from there.
Very good. Yeah, and the structural complexity is actually a positive thing in the bigger picture. It just makes things a little more time consuming and a little more complicated in the near term. But I have no doubt with more drilling and all the brain power and modeling capabilities we have today, you'll be able to figure this out pretty quickly.
Oh yeah. It's just a matter of drilling and using every tool that we have, right? The borehole EM. I got a fantastic modeling team, and then we can lean on the South 32 team as well, who have extensive experience at Hermosa Taylor, which is a very similar style of deposit. So yeah, I think 2026 will be a huge year for the project. I think it's going to see some more great sulfide intercepts, and I think we're going to be able to start showing some serious scale. And I hope that it starts catching the attention of the general markets, which I think for now it's certainly flying under the radar.
Okay, very good. So that's at Selena. Let's move over to Swift. So this one has been, I'll just speak to my experience. I won't speak to yours, but it's been a little frustrating to watch this evolve because it's been a little slower than I would have liked. You reported another hole.
Yep.
There's gold, 5.8 meters of 1.5 grams. So it's not a duster, but it's not 4 miles. So tell us about Swift.
Yeah. I think frustration is the perfect way to actually frame, how we felt with it as well, because it certainly, we've had 8 holes drilled over the last 4 years. I would have liked to have seen 8 holes drilled in the first 18 months of this project, right, to get us to where we're at today. But unfortunately, this is a project within the NGM portfolio, and the Cortez district is pretty high priority for them. So projects like Gold Rush, projects like 4 Mile have taken precedent. At times, they've taken, space in the lab, they've taken rig availability away from early stage projects such as Swift. So it has delayed and slowed things down a bit. There's also been, we just got our plan of operations permit approved at Swift, which allows for 200 acres of surface disturbance. And that will allow for extensive exploration on the project. And that actually has been holding back NGM because they haven't had any additional ability to build more roads, more drill pads. So we've kind of had to drill from existing areas up until now. So 2026 cracks that open. It allows them to build whatever roads and whatever pads they want to accurately target this thing. So I agree, it's been a slow process, but what we've continued to do is hit on every single drill hole, right? Every hole is hitting better and better gram meter intercepts. Hole 8, for example, like we said, it hit 5.8 meters of 1.5, and that was within 33 meters of 0.5 grams per ton. At hole 6, which was in 2024, we hit 2.7 meters of 7 grams, including a meter at 10.4 grams. And that was a really big hit for the project, because what it showed is, if you look at the Cortez P&P reserves and resources, their underground Cortez underground, which is all of the mines in the area, right? In their reserves, they have, it's 6.1 million ounces of 6.8 grams per ton. So what we showed with that drill hit is, okay, we can deliver, you know, what you want to call ore grade intercepts, right? It's not a resource yet. You can't call it ore, but we can hit the kind of grades required to operate an underground mine in the Cortez district. So that was material. I was hoping that that drill hole number 8, I was really hoping that that would have hit slightly higher grades, you know, maybe get a, you know, 3 to 5 meters of that 10 gram per ton. And we actually, based on when we drilled the hole, you can see that it's just a step out. You got hole 6 is that red star in the center, 500 meters to the southeast, a long strike of that was hole 8. And we hit, you know, we thought that 5.8 meter zone might run 5.8 meters at 10 grams, right? That's how good it looked. It had the right geochemistry. It had all the right things going for it, and it just didn't quite have it. It actually
was a heartbreaker.
It looked better, like physically, the core looked more altered, more mineralized than the 1.1 meters at 10 grams in hole 6. And you're like, like we literally, we thought we had it, right? We thought we had, that would have been, you know, maybe 33 meters of 2 or 3 grams per ton within, including, you know, 6 meters at 10 grams or 15 grams. That's what we thought we had. We were really excited. And so having the assays get dragged out as long as they were was even harder, right? Because folks are going, you know, oh, you must have missed. And I'm like, actually, I think we did pretty well on this hole. And it just, you know, we were waiting on assays. But it certainly hit the mark for NGM. They're spending 5.2 million this year. We've got a multi-kilometer, that red halo there is showing a multi-kilometer, essentially gold, drill defined gold zone, right? Every single, you look, 52 meters of 0.4, 24 meters of 0.5, big thick intercepts of the right host rocks that are showing continuous gold mineralization. There is, you know, low to modest high grade, you know, low to high grade, including intervals within that. And these holes are mostly drilled anywhere from 500 meters to a kilometer apart. So we need to start vectoring in and really getting tighter space drilling to get into what we hope will be much higher grades. I mean, just to put it in perspective, I can't count how many times I've been lucky enough to be a part of multiple discoveries over my career. And you can drill an amazing drill intercept 10 meters at 10 grams, and then right beside it, you know, 50 meters away, right in the middle of the ore body, you can go drill 33 meters at 0.5. That's the point, is that these things are erratic, right? They're not mineralizing in a perfect, you know, vacuum, right, and creating this big blob of ore. They're highly erratic, and it requires a ton of drilling to define these things. And when you compare where we're at in the project right now, which is 9 holes, hole 9 is pending, and it was drilled in a completely different target area up to the northeast in the Mill Creek corridor. The 8 holes, the roughly 6 holes, I guess, that we've actually drilled in the Southwest Fifth corridor, every single one of them is hit. And if you look at the 4 Mile discovery, it took 11 drill holes till they hit, you know, the big discovery. Up until then, through hole 10, they hit a bunch of smoke, right? Even lower grade and narrower intercepts than what we're actually drilling at Swift. So we're on to something big here, but it is going to require more drilling to prove it.
Keep the dream alive, Chad. I got to ask you about the spending and the finances here. So I want to get clear on a couple of things. So the news release says that NGM to date has spent $14,482,000 in qualifying expenditures through the end of 2025. Was that, like, to be clear, 8 drill holes cost almost $15 million? Is that right?
Yeah. Yeah. I mean, you factor in, you know, the cost of the plan of operations, which is easily $500,000. You take away salaries over a 4-year period for teams to run this thing, you know, that can easily equate. I mean, I don't have the numbers in front of me. I believe it's around, they allocated around $250K a year in salaries. You know, so there's another almost $1 million. So take $1.5 million off of that for just kind of overhead cost and all that, maybe 2 million actually with land fees. And so you take 2 million off of that, you're still looking at, you know, roughly $12 million to drill 9 drill holes, right? So it is not cheap. It's exactly why we brought on partners like this, right? Like the 4 Mile discovery, they're drilling 1,500 meter drill holes, right, to fully test this thing. And we're drilling anywhere from 1,000 to 1,300 meter drill holes at our project. So you want to have a big partner like this to fund this kind of high risk exploration. If we'd have funded $15 million US in spending,
no, I mean, the company would be done. Yeah, it'd be done.
We'd have 600, 700 million shares out and still not be at a discovery right? So
no, I mean, it'd be the end of the company at this point if you had funded yourself.
It's
Yeah.
like
No.
what happened to New Legacy Gold, right? They were onto something, deep target in the in the trend, but they ended up with almost 1 billion shares outstanding, and they folded. So, yeah, I still firmly believe that the hybrid exploration model is the right approach in the kind of projects we've been trying to advance. Selena, Swift, Black Ridge, all very high risk but conceptual targets. I mean, we've had a ton of success at the end of the day. These are grassroots plays that have all, Swift and Selena have delivered material discoveries, but there is still that question mark: is how big is it, right? Can you turn it into an ore body? And we haven't answered that yet at either project. And I think that 26 hopefully gets us a lot closer.
Okay. So yeah, I'm kind of just blown away because I know drilling in the southwest of the US is expensive, and core drilling is $600-700 a meter pretty much. Depending upon a lot of factors. If you're drilling shallower holes, it might not be quite that much, but I would say it usually is, when you go all in. But $1,000 a meter, or even more than $1,000 a meter, that's kind of new for me. And to see the biggest operator in the state have these kinds of costs is kind of wild, just how expensive this has been. So
for sure.
In 2026, they have to spend $5 million, or they lose their option on the project.
Yes.
So tell us about, it says $5.518 million by the end of 2026. What does that get you here at Swift in 2026?
Yeah, well, the good thing is that, to be fair, we actually have already pre-collared. Let me set it. We've actually pre-collared holes 11, 10, and 12. I know they're out of order. They have hole 11 planned in another part of the project. But we've got two holes already drilled to like 2,000 feet. They're cased with steel. They're ready for the core rig to come in. So when we say, you take away 2.5 million, let's say, in operating and overhead costs from what they've spent, and they have technically kind of like 12 holes or 11 holes drilled actually instead of 9. It is probably below $1,000 a meter, probably in that 800 to 900 range if I just was doing the math off the top of my head, but it's still exceptionally expensive. So I think that they can get probably anywhere in the kind of 3 to 5 holes, probably closer to, I think, 4 to 5 holes complete in 2026 to get to that 5.5 million range, because they've already got a few holes already, primed and ready to go. So the cost to drill those is substantially less. And I think we can add about 3 more, hopefully, as follow-up holes in the year. So, like you said, though, it is a lot of money. Our kind of main goal here is get it up over that, get to the, 13 to 15 hole range, right? Which is roughly what it took to discover, Gold Rush, 4 Mile. That's kind of that critical mass of holes you need to really start tying things together. Obviously, you need a little bit of luck as well, but this year should get us there. And if it doesn't, we get the project back 100%. And honestly, with 18 or 19 million spent eventually, if we do end up getting the project back, that is a heck of a base to kind of continue exploring and going after it. And we would certainly either have no problem finding a new partner or doing the work ourselves if it came to that.
Okay. So to be clear, hole 9 is pending assays at Swift. Holes 10, 11, and 12 have already been pre-collared. You know exactly where they're going. They're in the drill plan for 2026. Is there anything else that's set in stone for what's going to be done in 2026 at Swift?
We're going to have, hole 11 is actually not pre-collared yet. It is planned, but when they were doing the pre-collars, our plan of operations hadn't been approved yet. So they actually couldn't drill hole 11 just yet. So hole 11 is in the plan. I'll probably put it on the next iteration of maps. And then we're having a Q1 meeting at the end of March, which is really going to hammer out what the rest of the year looks like. The NGM team is currently putting together their budget, what they're going to do with that 5.5 million. And we'll have a much better idea. But we know that they're going to start drilling in April this year instead of July, August, which has been the previous year. So we're going to have assays coming a lot sooner in the year, and hopefully there'll be some pretty material results. Be exciting.
Yeah, so I think investors really need to be aware that Swift is very much alive, and this is a very big year, right? In some ways, you could say it's a make or break year. That's a little bit of an exaggeration because you can always get new information, and There could be
Sure.
more holes done in 2027. But when you're saying that there's a minimum of 3 holes, potentially up to 5 holes being tested at Swift in 2026, that's a lot of data. That's the biggest program we've seen in 1 year to date.
Yeah.
So a lot of shots on goal to make a discovery that could potentially be company making for RDG in 2026.
Yeah, and I think that's a great way to summarize it. Like, it's really important to point out, like, there's a lot of, like, what we're doing here is very high risk, right? Of course, there's no guarantee of success, but there are very few juniors that are going after these kind of scale of things, right? Anywhere in North America, right? There's very few. There's a lot of companies going after, you know, expanding known resources on an open pit, you know, or maybe they think they can turn a 500,000 ounce resource into 1 million. And that's, in this gold market, that's exciting, not poo-pooing that kind of work. But the point I'm trying to make here is 100 gram meter drill hole at Swift is a company making drill hole for the company, right? And we're talking about maybe we have the next gold rush, right? We're going after 5-10 million ounce discoveries here. That's the kind of thing we're going after. And if we can continue to show growth here, that's, you know, Ridgeline owns a fully carried interest to commercial production on maybe the next big gold discovery in Nevada. And it's all fully funded by our partners. So I think it's incredible leverage. We have not participated in the big run up in the metals like a lot of the juniors have. So we're still, in my opinion, a very undervalued story.
Give me a quick, refresher on the option terms, with NGM at Swift.
Yeah, here they are. Whoops, sorry, they're messing around. There we go. So the way it works is that they're multi-phase deals, right? So you have the initial earn-in to earn 60% by spending 20 million over the first 5 years. That is now coming to a head, I guess, if you want to call it that, right? By December 31st of this year, they have to spend that 5.5 to get them to 20. Then they get their initial 60%. Then they have the option. They have a 90-day window where they can choose to option the second earn-in phase, right? And what that is another $10 million US for 10% over 3 years, right? That's for a total of 70% ownership. If they, continue expanding in full, they can also provide a non-dilutive funding, call it a funding package for Ridgeline. That would be called the development option. That's an additional 5% ownership they can earn. So if a material discovery is made, in our opinion, a group like Barrick is going to either buy it out outright, or NGM. They don't want to have really partners at the end of the day on a producing mine, or they're going to earn as much as they possibly can for as little as possible, which would be fully executing the deal, right? Because even on the development option, that fully carried interest is them providing us a loan at prime plus 3%, which they then recoup on a 100% basis on commercial production. So Ridgeline gets to participate the whole way along. As soon as the first gold pour comes, NGM goes, yoink, that's ours first, right? We're going to pay back that loan now. And maybe in 2 or 3 years, Ridgeline becomes a fully cash flowing entity, right? With participation in that joint venture as a minority partner. So it's a great deal. I think it's really the way it's structured is our team believing that there is a mine here someday, right? And so structuring in a way that provides long-term value for Ridgeline and its shareholders.
Thank you very much, Chad Peters.
Yeah, thank you.